Gold prices continue to trade the range, that 1280 to 1300 range. We can't seem to break out of it. We recently tested the lows. Support held. We did trade below 1280, but we're unable to settle below 1280, which meant we're right back in that range. Market feels very comfortable in there. The fact that we tested the lows and failed suggests that we're probably going to make another run at those highs, but certainly still within that $20 range that we've seen going back over the last several weeks. So 1280 to 1300. Now we're starting to see technicals pick up. The fundamentals obviously become more about risk, become more about Fed policy, become more about global growth. As those numbers come through and down the pipes, we start to see gold kind of get pushed back and forth. But again, it is holding that range, and that's something that we'll kind of wait and see now how much longer it can do that. That's the same trade sideways. And if you look at the dollar, it's really not been a factor in this latest move. The dollar's been very strong. Today it saw some selling and saw some weakness, but based on the government shutdown, based on some of the earnings numbers, based on the growth expectations you're hearing out of Davos. But I think that right now, ultimately, the dollar's non-effect on gold, because the dollar's been rallying, gold's been just holding in that range. That 1280 to 1300 range hasn't really moved. Even before the 1280 to 1300, gold was lower, so it was actually rallying with the dollar. So it's not really going to be a dollar trade that we've seen in historically, the opposite sort of trade that we've seen historically. And I think right now gold is on its own path. And if you look at global risk is something that we typically reflect in maybe in yields, maybe in equity prices, perhaps in central bank policies, whether they're easier or tighter. And I think right now, as you start to see those bounces in the equity markets, as you see those yields go higher in treasuries, you're not seeing a whole lot of reaction in gold. And that to me says that the gold buyers are holding on because there's just too much uncertainty out there. How is this whole government shutdown? How is the trade China resolution going to present itself? You've got Brexit issues that are now certainly still on everyone's brain, fresh from what we saw over the last couple of weeks with the UK. And ultimately right now, the global growth numbers, which are being spoken about in Davos, I think are on top of everybody's list. How much, how low or how weak can the global growth numbers get? And that's feeding gold. So right now, gold prices remain elevated due to the fact, not because of what we're seeing in other areas, but because of what we're not seeing. And that's clarity in the future. And I think with this month's Fed meeting coming up at the end of January, it could give us some clarity here domestically based on the fact, not only one, that we get the Jan FOMC and we get the statement, but let's not forget, we also get a press conference. Mr. Powell has instituted press conferences after every FOMC meeting starting this January. So we will get a press conference. No forward guidance that I'm aware of. So I think right now it's just going to all be about him. And then in February, we're going to get a semi-annual testimony to Congress. That seems like years off, but ultimately we'll be right around the corner, followed by Brexit. So a lot of things kind of building up here, and gold right along with it. Gold prices remain elevated. Look for a test of the 1300. And if we can sustain a trade through that, it means that gold prices could elevate to 1350 prior to Brexit, which I still think is very much within the wheelhouse, especially if the long dollar trade gets tired, which it looks to have gotten today. And that would also help exaggerate any moves north of 1300 if we can get there in the short term.